Hello, welcome to FountainFX on Thursday the 9th of October 2014, and I'm just going to be sharing with you a very simple strategy that some people can use if obviously you haven't got the time to sit in front of the screen and watch what's happening. With any strategy anyway, you can adjust it time-wise in terms of what your availability is. So if you are, for example, a day trader, then you go down to looking at the hourly at 15-minute kind of charts, and if you are more of a swing trader or long-term trader, then you'll be looking at the weekly, daily and 4-hour charts. In this instance, we've got a 4-hour chart up here, and I just want to share with you a particular strategy that I was actually talking through with Kevin the other day when we were doing the one-on-one sessions, and I was just sharing some bits and pieces with him to try and help him improve on identifying opportunities in the market. And if we see here, price has been pushing down on the Australian US dollar, and then it's reached an area of support at the bottom where when price hit it, pushed up, broke through this previous high. So this is where off this area of support here, price has actually broken this downtrend, or at least halted the downtrend. Price then fell quite rapidly into it and has turned from there and pushed up. Now at the time when I was talking to him, we were looking at this spinning top area and price pulling back, and I was trying to share with him and talk to him about how he could potentially use a buy stop order to trigger himself into the trade if it continues to push up. As you can see here, price has pushed up and has pushed through. Where this line is where we were talking about putting the stop order, because it's just above the previous highs. So if there was a breakout, price wants to continue to push up, then you could actually be triggered into this trade. Had we done so in terms of that order, which is at the 88.36, it's now 88.86, would be 50 points up on this particular trade, and it seems to be running quite nicely. We do have to be aware of the fact that there's other areas of previous resistance that price has got to break through if it wants to continue to push up in this uptrend that it's starting to form. Now the way in which we actually identified this is if we went from the daily chart. If I just quickly flick over to that, we can see on this daily chart that price has literally fallen into this area of support and pushed up and then come back down to it. And what was happening was, at the time we were looking at it, price had pushed quite heavily up towards this previous high, and we could see that actually the MACD, if you look at the MACD histogram was actually pushing up, which despite price coming down was actually saying momentum is starting to change, it's starting to turn to the positive side. So, and we can see that there was a crossover down here. So while we had a bit of an order flow because price touched, pushed back and then came back down again with quite momentum, the MACD was saying actually, despite what price is doing, the momentum is starting to turn, and now it's broken above this high, this previous high here, and continued on up. It's now a case of saying, look, we're into a long, no longer a short on the daily chart. So what you want to be doing in terms of how to engage on this is we need to then go back down to the 4-hour, and we need to look for the next opportunity, which is where we start to see a pullback. And when we see a pullback from here, and we can then take the break of the pullback. Okay, hopefully that makes sense, and you'll be able to start using this kind of trading strategy for those that are more swing traders that don't have the time to sit and look at it. But for those of you that do, you can do exactly the same thing, but look at the 1 hour and the 15 minutes. So if you were day trading this right now, you could be looking, see if you look, price has come into this previous area of resistance and is starting to form a doji pattern on the 4-hour. That means that you're expecting a change in direction because there's indecision. However, we had one before and price just pushed up from it. So you look for the pullback like happened here with the red candles, and then when you get the break of that pullback, that's when you actually have your trigger to buy and continue in the long. So look for a pullback on this and go long with it. And that's really it from FountainFX today. Happy trading.